There are many types of fraud. We have asset misappropriation, we have corruption, we have financial statement fraud, and even a whole lot of others. But for the purpose of this course, we are limiting the types of fraud to these three. Because at the end of the day, the hoarders can still find their way under one or the other of these three broad types of fraud. What is asset misappropriation? Asset misappropriation is simply the theft or misuse of organizations' assets, be it government organization or private organization. It's talking about the theft or the misuse of the assets. Meanwhile, you know that assets, when we talk about assets, we are not just talking about money, we are talking about the capital, the fixed asset and the current asset of the organization. In fact, sometimes we are talking about the time, because time is an asset. So we have different types of asset misappropriation. We have skimmings of revenue. We have stealing of inventory. For instance, now in an organization, maybe a mall, some staff just colluded and they are stealing inventories. Inventories means stock. That is an asset misappropriation because inventory stock is an asset to that organization. We have obtaining fraudulent payments. We have payroll fraud. Let me use for instance Nigeria. Few years back, it was discovered that there was huge payroll fraud in the federal government payroll and payment system. That is, there were thousands and thousands of ghost workers on the federal government payrolls that has been slaughtered there by fraudulent people in government. That means they were paying people that don't actually exist and do not do any work for the government on monthly basis. They were paying them huge sum of money, and some people were making away with this. This is an example of payroll fraud. Then we have theft or misuse of cash. That is when you misuse the organization's cash. When you steal it, because cash is an asset to the organization, you are misappropriating the organization's assets. We have procurement fraud as well. Procurement fraud. In Nigeria, for instance, we have an agency, and in most of the countries, there is always an agency. Like in Nigeria, we call it BPP, Bureau of Public Procurement. By law, they are set aside to look into the procurement of all government organizations, both ministries, agencies, and departments. They are saddled with the responsibility of regulating the procurement. That is, if you want to build, if you want to procure vehicles, they set the standard, the acceptable standard, so that people will not misuse the organization's asset. But for instance, now you head the procurement department of a particular agency of government, and three people submitted their bids to you for a particular contract, maybe for building of the headquarters of the organization. In a building process, there's always a technical bid and a financial bid. The technical bid is talking about your capacity, your technical capacity, the technical capacity of the contractor. The financial bid is talking about how much will this cost us? How much can you do this for us? A quality job that you've stated in your technical bid. How much can you give it to us? So at the end of the day, by the time they submitted, I'm giving an example that you are the head of procurement. You looked into this and you saw people with higher technical capacity and better financial quotations, and you ended up giving it to a person that has the least quality and the most bogus financial bid. Maybe the person is your cousin or your friend. That is misappropriation. That is a procurement fraud. Because at the end of the day, the person will do a work job at a huge cost, which will result into loss for the organization in question. We have so many others. For example, we have expense reimbursement fraud. In some organizations, especially both even government and private organizations, they will send you to a trip, use your money. By the time you come back, we will reimburse you. People go as far as getting fake fake hotel receipt, fake recharge card, what's it called, receipt, fake flight tickets and all that, just to claim expenses that are not. These are misappropriation of organizations' assets, because at the end of the day, it results into actual outflow, unnecessary and unjustifiable outflow of assets, both cash and otherwise. By the time the MD of a company just wake up one morning and decide to take two of the organization's vehicle and just dash it out to his girlfriend or friend, that is a pure example of asset misappropriation. Is a type of fraud. So the second that we'll be looking at is corruption. There was this argument at a time where a former president of Nigeria said corruption is not stealing. Well, technically, corruption is not stealing. What is corruption? Corruption is just wrongful or unlawful misuse of influence. So unlike asset misappropriation, it's not a direct theft or a misuse of an asset directly. It's just a misuse of your influence. You are holding an office. You are holding a particular office somewhere, and you misuse your influence as a result of holding that office. The decisions you are meant to take, you didn't take the right decision. You use that office, you use the influence of that office against the interest of the organization you are serving. This is rampant in Nigeria. This is rampant. We see a situation where people at end of affairs, maybe they were meant to negotiate a particular contract on behalf of their nation or behalf of their state. Maybe some foreigners are coming to start a company here and they want a license for this and that because of the kickbacks and bribe. That is why bribery and kickbacks is always aligned and is always the brainchild of corruption. You will see them, they will just, by the time you even go through the policy paper and the contracts that they sign for their company or their nation or their state, as the case may be, you will be like, is it like this person doesn't have any brain? It's not like they don't have brain. It's because of the kickback. They've wrongfully used their influence. We as well have financial statement fraud. Financial statement fraud. What is financial statement fraud? Financial statement fraud is just intentional misrepresentation of the finances or financial information of an organization in order to mislead those who are relying on those financial information to make decisions. You might want to mislead the government so that we will pay lower tax. You might want to list, as an organization now, you might want to mislead the investing public so that they will invest. They will know that the organization in question is actually on the verge of bankruptcy. You can imagine an organization that made 5 billion, maybe in dollars or in naira, depending on the country we are talking about. And they actually declared 10 billion as their profit for the year we are talking under review. You can imagine, as an investor, if you are the one and you are basing your decision on the profit for the year under review, if you see 10 billion and you don't see such in the industry under question, maybe it's a banking, we are talking about the banking industry, and they now shoot, they were meant to be the number 8 or the number 10 in terms of profit. They will now shoot to the number 1. This is a good company. I should better put in my money here. And maybe they are actually on the verge of bankruptcy. But because they've misrepresented their figures, you are lured into what? Into investing. The same thing for tax purposes. People do it, especially in all these advanced countries. So overstating revenues, a company might decide to overstate their revenues just to misrepresent what the true nature of their finances are. They might decide to capitalize expenses that are meant to be expensed for the year. For those who are accountants, they know that an expense is a cash outflow that the financial benefit of it is just for that year. If we are buying paper that we are using within a weeks or within, as long as it falls, the financial, the benefit for that expense is for that year under review alone, and it doesn't transfer to another year in the future. It must be expensed for that year. So they might decide, a company might decide to we will see an example, a case study of this, a good case study of this as we go on in this course. A company might decide to just capitalize this. That is, put it as if that expense is a capital expense. That is, we are now turning that expenditure into an asset, so to say. That is misrepresentation of finances, of the financial statement of organization. We have a whole lot under this, and an auditor, a forensic accountant, a fraud examiner must know what to look at, what all these three or more types of frauds are, and the areas it needs to look at.